still joined by Sashin Arushkin, who joins us to unpack Invicta Holdings, which released its interim results this morning, posting a 3% increase in revenue. Joining us in studio is the company's Deputy CEO, Charles Walters. Charles, good to have you with us.
Thank you, Gugu.
I
Thanks for having me.
must say that the line that really stuck out for me was that the trading conditions in the 6 months under review were the most challenging experienced yet by the Invicta Group. And it does seem as though it's a double whammy of the strikes.
Certainly, we got off to a very poor start. Mainly on the back of the strikes, the industrial unrest, uncertainty, and we put out an early SENS update to the market because we could see how bad things were, and we knew we would not recover that in time for the end of the first half. At that stage, we were saying we'd be down 20 to 30%, and we're very pleased, in a strange way, to only be down 17 and 18% headline and normalized earnings per share at this stage.
You know, it's interesting because if you have a look at Invicta, I mean, say 5 years ago, and where you want to be in 5 years' time, is it more searching for growth offshore, or in essence, and I hate to use the word, de-South Africanizing yourself, is it looking for external revenue streams to be able to put your shareholders, and you've got some very powerful shareholders, minds at rest?
We are looking at growth in all respects in all our three major business units. That's the BMG business, the Capital Equipment Group, CEG, and the Building Supplies Group. Each of them in a slightly different phase of maturity and development. Certainly Africa is a big growth focus for us. And then the Building Supplies piece, really, we see that having a large opportunity to grow both in South Africa as well as into Africa. And then to add to that, we are looking internationally to bulk up, try and find another BMG, try and find another Kiernan, and you know, we continue to look for opportunities to expand in those two pillars, which is BMG-like businesses and capital equipment spare parts.
Why is it easier to find a partner out there instead of going it alone?
I think we'll certainly look at the partners along the way. We talk to private owners of businesses and they become our partners de facto. Kiernan was a good example. We partnered with the founding family there in our 75-25 bid initially, and we've just by agreement taken them out, so we're now 100% Kiernan. And we need to find partners. We like working with partners who give us local experience of their business as well as the local conditions.
How tough is it in South Africa? You know, I mean, I know you've said this is the toughest, but how tough?
On a scale of 1 to 10, I think we're at 9. We are really struggling. We are coming back a bit now, which is really positive to see. Too late to recover much in these current results that we've just reported. But I think you know, we've got a lot of challenges with the competitive inputs to business, whether that be labor, electricity, and so forth. A lot of policy uncertainty. It's challenging. If anything, our words of a couple of years ago that we are concerned about South Africa deindustrializing, I think still remain. And in fact, we've seen a lot of customers going out of business. We deal with many little customers out there every day on the industrial front, and things are hellish tough for them out there. So the DTI needs to get a wake-up call. Things are not good in industrial South Africa at the moment.
Are you liaising with them at all?
We are trying to, in our own way. We don't like making big public statements, but we certainly are engaging with them.
I think at a revenue level, obviously for government, it's only telling when you see lower and lower revenues. So maybe that is the turning point in terms of more engagement from your side.
I hope so. Yeah.
But clearly then, where do you think things are lacking? You mentioned regulatory as well as policy, but the key issues when you liaise with the guys on the ground?
The problem is we end up talking so much about the factors that we can't control, which are in government's hands, rather than the factors that are under our control. And we're doing what we can to manage our costs, manage our overheads, but it has been in the cycle a declining phase. So we're doing what we can with our businesses, but you certainly wouldn't put your marginal rand of investment or investment dollar into South Africa, where it's difficult to take a long-term view. But we are continuing to invest in South Africa because it is our base from which to grow into Africa. We've got a big project on at BMG to improve the logistics capabilities and expand those locally. And we're looking at a number of acquisitions at this time. It's a good time to be making acquisitions. So we're not running away from South Africa. And, you know, I don't want to get that message, but you asked me how tough it is. It's pretty damn tough out there.
The expansion and the acquisitions that you make mention of, are you looking to raise capital going forward, or is your balance sheet fit enough?
In fact, Gugu, we just announced today as well, slightly after the results, that we are going to raise capital. Some of that is to fund operational growth, which we would say is acquisitions and growth within our respective businesses. And some of it is to shore up the balance sheet for what we hope is coming, and that is further acquisitions offshore. So it's both in the meantime, we'll use that cash to retire some short-term debt, but it's exciting times for us at Invicta as we look forward.
And then also from a personal point of view, you take up the reins. When is it? Next year?
Officially 1st of April 2015. But
no jokes.
No. Maybe the 2nd of April 2015 would be better. We're a flat management structure. We've worked together for many years. There's a bit of a role change going on. We were delighted that Byron Nichols has joined us to take over from me as CEO of BMG. And then I'll take over from Arnold on the 1st of April as CEO of Invicta. And we will continue to look at bolstering our management resources, because our international expansion plan will hinge on two things: our financial resources as well as our management resources.
On that talent, is it tough attracting it and keeping it in the country?
Funny enough, we haven't found it as tough as probably when things were booming back in 2006, 7, 8. But we look after our people, and we make sure we have careers for them, and we make sure that they want to stay with us because we've got an exciting business.